XYZ Limited produced and sold 25,000 units in a year. Selling price is rupees 65 per unit. The cost information are as below. Direct material 25 per unit, direct labor 13 per unit. Production overheads are given, administrative overheads are given, selling and distribution overheads are given, variable and fixed. So you can see each overhead is divided as per variable and fixed cost. Now you have to prepare income statement and you have to show profit as per absorption costing and profit statement as per marginal costing. Now let us first start income statement. Income statement as per absorption costing. Now we all know the XYZ Limited produced and sold 25,000 units in a year. 25,000 units in a year at the rate of rupees 65 per unit. So first of all, our first job is to record sales. Sales, that is 65,000 multiplied by 25. It will give you 16,25,000. Now, one thing we have missed over here is that first of all you write particular statement. In this particular column we will record all the components, and here we will record cost, and here we will record total cost. It will be a sort of cost only, but for more elaborative and accurate understanding we basically make two columns, and here we will write total cost. Total. Now sales is 16,25,000. We will record this statement in this particular column. As such, there is no format that we have to record this statement in this particular column, but it is just for as per our general understanding we are recording this statement over here. It's all up to you how you want to present your question so that it looks more presentable and impressive to the reader. Now from sales we will deduct less cost of sales. Cost of sales is your direct material. Direct material we all know is given 25 per unit and 25 per unit, and total number of units are 25,000. 25,000 into 25, it will give you 6,25,000. Next is direct labor. Direct labor is given in the question 13 per unit. 13 per unit into 25,000 units, it will give you 3,25,000. Now, after that, we will record production overheads. Production overheads. Production overheads we have been given in a variable form, and we have been given as fixed overheads. Variable in the question 2,25,000 and fixed is 1 lakh. So there is no change in it. Next is administrative overheads, which are given as fixed. We simply copy them. And it is given in the question, administrative overheads. The value of administrative overheads is 75,000. We will copy them. 75,000. There's certain typing mistake, no problem. We will copy over here. Next is your selling and distribution overheads. Again, they are same, variable and fixed. Here we go, 25,000. 25,000. Now, 16 lakh 25,000. 16 lakh 25,000, and we will do the total of all these statements. It will come out to be 14 lakh. Now, we will deduct this cost of sales, that is 14 lakh, from sales, which is 16 lakh 25,000. It will come out to be the profit. Profit is 2 lakh 25,000. 2 lakh 25,000. So, profit under absorption statement, absorption costing, is 2 lakh 25,000. This situation is where because there is no opening stock, there is no closing stock. Basically, we do not differentiate between variable and fixed in case of absorption costing. And here we are preparing the statement as it is: sales less cost of sales, direct material, direct labor, production overheads, administrative overheads, selling and distribution overheads, variable and fixed. And what is the basic meaning behind doing there is no difference between cost of sales is that when we are calculating cost of sales, we are including each and every item, whether it is fixed or variable, for calculating the total cost of sales. So this is the main protocol which is being followed in absorption costing. So sales 16 lakh 25,000 minus 14 lakh will give you a profit of 2 lakh 25,000. Now next is income statement under marginal costing. Income statement in marginal costing. First, without any second thought, we will carry on this format over here also. Now, sales, we all know it is already given in the question, but we have to calculate the sales by multiplying selling price per unit with the total number of units. Now, this statement is very different from what we have prepared in case of absorption costing. We will deduct less variable cost. First thing, we have to see what is our variable cost and what is our fixed cost. Next is direct labor. $3,25,000. Next is production overheads. As we are preparing statement under marginal costing, we will take overheads only which are variable. That is 2,25,000. Next is selling and distribution overheads. Similar thing we will follow over here. We will take selling and distribution overheads which are variable. 25,000. Now, we will first calculate the contribution. We all know, and when we are preparing any income statement or profit statement under marginal costing, we need to calculate the contribution. Sales minus all variable cost. So sales minus 6,25,000, 3,25,000, 2,25,000 and 25,000. It will give you a figure of 12 lakh. Now, calculate the contribution. Contribution is 4,25,000. 4,25,000 less fixed cost. Fixed cost, we all know. We will write down all fixed costs under production overheads, under selling distribution overheads, under administrative overheads, fixed. Selling and distribution overheads, $25,000. Administrative overheads are also given fixed. $75,000. Now total of this particular items is 2 lakh. We will deduct this amount and finally we will get the profit. Profit is 2,25,000. Income statement under marginal costing. Now, this is an income statement which has been prepared under marginal costing. As you can see, first of all, we will calculate sales 16,25,000 less variable cost and less variable cost. Then we will get the contribution. Then from contribution, we will deduct all fixed cost. and finally we will get the profit. So the basic difference, as you can understand from the numerical between absorption costing and marginal costing, is that while we are calculating cost of sales under absorption costing, we consider all types of cost and we usually do not differentiate between fixed cost and variable cost. But in case of marginal costing, what we do first, we will deduct all variable cost and we have to calculate the contribution, that is sales minus variable cost, direct material, direct labor, production overheads, variable. In question we have been given production overheads as variable and fixed. So we will first identify variable cost and we will write it over here. Then similar thing calculation we will do on selling and distribution overheads. We will identify variable cost, we will write under total cost, and finally we will get the contribution. Now, after getting contribution, we will deduct fixed cost. Fixed cost, contribution minus fixed cost will give you profit. That is 2,25,000. Now you can see the profit under absorption costing and profit under marginal costing is almost same. Why is it so? Because there is no mention of opening stock and closing stock in this particular question. So that's why these both profits are same. If I say in a very brief manner, profit statement under absorption costing, it will be sales minus cost of sales, which will give you profit. There is some typing mistake. Sales minus cost of sales will give you profit. This is a statement under absorption cost. So this is you can say income statement under absorption costing, and similar statement we have solved with the help of numerical in this particular question. Sales minus cost of sales, and there is no differentiation between fixed and variable cost, and we have got the profit. Now statement under marginal costing, it will be sales minus variable cost will give you contribution, and from this we will deduct fixed cost, and finally we will get profit. So this is basically the income statement under marginal costing. There is some spelling error, we will rectify it, no problem. Statement under marginal costing. So similar statement which I have summarized over here, we have followed in this particular question, where we have deducted, we have identified total sales. From those total sales we have deducted marginal cost or variable cost, and finally we have got the contribution. This is, let's highlight it, and from contribution we have deducted fixed cost, and finally we have got the profit. Sales minus variable cost will give you contribution, less fixed cost will give you profit. So this is all about income statement under marginal costing and Absorption costing, the profit is same because there is no opening and closing stock. This is statement under marginal costing. So I hope by now you must be clear what is the basic difference between absorption costing and marginal